Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin. If you missed it yesterday, Dennis is out for the next week, actually. Dennis will be out. I know. He's taking a whole week off. He's out today, tomorrow, all the way until next Thursday, just in time for Joel to go out of town for a couple of days. So you've got Joel and myself through Wednesday, and then Dennis and I next Thursday or Friday. So no Spencer, Joel, Dennis for the rest of August or rest of July until August. Yeah, that's how it's going to be for the rest of the month here. Anyway, we got a lot to discuss, though, if it's earnings season, guys. We got earnings from AT&T, Biogen, Domino, Southwest, a lot of the airlines, right? Southwest, American, Alaska, all reporting this morning. We'll talk about earnings. We'll talk about what's on your mind. Drop your tickers into the chat. We will do our best to cover them all. And yeah, Marc Chaikin is supposed to be on here in about 12 minutes from Chaikin Analytics. He joins us every other Thursday. And at 9, I'll have Peter Tuckman, the Einstein of Wall Street, on joining me as well. Joel, good morning. We'll bring up your charts and
Yeah. Oh boy, I'm gonna have to earn my keep here through next Thursday, right? I mean, without Triple D, I might have to say 7, 8, 9, 10 sentences for the whole show. But no, I talked to him before he left. He wants quiet. He wants quiet in the market.
It is quiet.
And so far, he's getting that. About a $10 range overnight. Strong close yesterday, so we'll keep an eye on that 51.50. The only reason is that's your pre-market low. So no downside until we at least take out the pre-market low, which coincides with the close. The high 43.61 a quarter. I wish I could say I had something up there, but I don't. I would just say above that, you got your 5 and 6 day highs and you have your old time closing high. That might be a little much to ask for today after the big rally on Tuesday and Wednesday. Crude getting back half of that move in 3 days after the big decline. Be keeping an eye on this whole 71 area. Still up 38 cents at 70.68. Gold falling back under 1,800, down 930 at 17.94. Silver clinging to 25. That's down 17 cents at 25.08. Bitcoin still riding the crest of that conference. That's up $245, 31,865. And Ethereum's having a little bit better of a day. That's up $44.25 at 1985. So there's a look at some of the commodities and futures.
Joel.
And let's see. Someone says I'm slimming down. No, I'm not slimming down. I'm doing the same thing. I'm a $1.80, $1.85 all the time. So
Joel's weight is as constant as the market's going higher. Right.
Exactly.
Yeah.
You just need to sell you need to sell that the strangle because it doesn't move much. But should we just rip through some earnings before Marc comes?
Hold on because I do want to ask you, at what price would you consider buying more? I don't actually know if you own any Bitcoin, but
don't have any.
Okay.
Don't have any.
So I'm thinking about buying more, both Bitcoin and Ethereum. At what price would you consider buying, since you don't own any? At what price would you consider buying? Because I'm thinking about it hard here.
I really, besides wanting it at 55 and 60, but it was going to 100, and I held back. My number's 20, and it just doesn't feel like it's going to get done. So I don't think this 30 is a bad area. I wouldn't go all in at 30, but it's just quiet down here. It had the update yesterday. You got the major support. You got monthly support here too. So the monthlies are the tell. So I think it's okay to nibble here. It just doesn't feel, like you get feelings about stocks and the market and the indexes, and it feels like it's just stuck. It just doesn't have this, the same pizzazz that it did before. So I like it down here. I like it down here, and then you keep the, you don't go all in, and then you get it back. I mean, the old breakout point, that would just be just too much at 20. Just doesn't feel like it's going to get there. So I don't mind this area at all, Spencer.
I just remember saying to myself at 50, like,
Yeah.
If only I could get if only I could, get it for 40 or 30 or 20. Well, here's my shot. So why not? So, I'm not saying I'm going all in. There are people in the chat that say Bitcoin has a great value at 0. Maybe you're right. I don't know. It's good. If it's good enough for, Jack Dorsey, Elon Musk, and Kathy Wood, it's probably good enough for me to take a nibble. So that's what I'm doing. Well, haven't done it yet, but strongly considering buying more because I own a very, very small amount of both cryptocurrencies. And
RAG makes a good point.
Sure.
And he's saying, isn't this at 50%? And I guess if you figure it, well, I don't know where you're figuring it from. If you're figuring it from the 7,000 low, we took that out considerable, but it all depends on where your point of destination, high and low is. But the monthlies, I mean, you got 3 monthly red candles, right? Probably end up red this month, but it's stopping in the same area. So, I'm leaving. I mean, I'd rather be long Bitcoin to short Bitcoin here at this point. So
yeah.
There you go.
Yeah, and everyone's saying, wait till it goes to 28, to 27, to 20. You know what? If Bitcoin goes to 100, I'm not going to care if I got it at 28 or 32.
Yes.
35. I'm not. I'm going to be happy either way, frankly. So I don't care. I'm not trying to get to the bottom here. I'm just trying to get it for a little bit cheaper than it was.
You know who we should dust off? Mr. Yusko.
Okay. What? So he can talk us into it again?
Yeah, I mean, he did.
He doesn't need to talk me. He doesn't need to talk to me, dude. I'm already in it. But
I mean, he made a good call before. So S&Ps are leaking here. Do we got anything macro, or are they seeing something out of Europe, or what's going on here?
Is Lagarde speaking right now? I think Lagarde is.
She's no Draghi. I mean, I don't know how many times Draghi's blown me out of the water with his statements, but the dragster.
I haven't heard much out of the ECB for a while. They're supposed to what? They're supposed to make their first comment since they lowered their global growth forecast, right? I think for the year. I don't actually know if she's speaking or what she's saying, but I guess we're down a little bit from where we were a couple minutes ago. Qs are still up for the morning.
Tech strong. I've seen a lot of green here. I'm seeing all green. Actually, on my top 11 components, which I like to keep an eye on, which make up 30% of the index. So, what we got? Market 5 minutes.
Let's do some earnings. I don't even know where to begin, quite frankly.
Well, let's do the after hours stuff first. What did we have after hours yesterday?
Nothing too crazy. We had Las Vegas Sands. We had Whirlpool. Let's go to LVS because that's the reopening trade. Right, nice proxy for that. No surprise they lost money, but they did miss the estimate by a little bit there. The EPS was a 26-cent loss versus a 13-cent loss estimate. They actually made over $1 billion last quarter, which is impressive considering. I guess maybe not because they mostly reopened. Anyway, that came in a smidge light. I didn't see any guidance for LVS. I don't know if they gave any. I didn't see it.
This is one stock that I know Triple D's in, and people talk about it, and to me it just wasn't a hot. It hasn't been a hot stock since the middle of 2018. Right. So like when you talk about buying good stocks on pullbacks and everything, I don't consider this like a good stock. And it's just been on the monthlies. I mean, there's not one monthly. I mean, there was a scratch candle here. Monthlies aren't telling you anything. Pre-market low comes in at 47.55, and man, oh man, there's your number. 48. It took that out. I mean, if you want to hold on here, and I know a lot of people are on this thing, then I guess you're leaning on this 46.15. That was your low on Monday. That was buffeted by a 46.79 low. So there's your support. But if you're sticking your neck out here, it's a $2 risk. You're fighting monthly red candles here. So I'm kind of hands off on this one. As always, if you get a pop, the bottom of yesterday's range, very close here, 48.06. So if you want to short this thing, you're not worried about the gap. Get your order out there at 48.05. Doesn't feel like we're going to see that closing price of 49.42.
Texas Instruments is down this morning. Their numbers for last quarter were fine. Here the EPS beat, the sales beat. Going forward, they gave some EPS guidance. Though that to me, it was in line, right? The range they gave for the Q3 EPS was in line with the estimate. The range they gave was also in line with the estimate. So unless there was a third or fourth number that I don't know about, the numbers seem mostly okay to me. What is this? Analog sales above the consensus, blah, blah, blah. The forecasts were above the estimate, so I'm not quite sure.
Yeah, why they're whacking this thing. Big day yesterday, reversal. People are jammed in this one. We'll say the bottom of yesterday's range, 188.45 is resistance. That's a couple bucks away. And if you feel like you missed the bargain on Monday here, 183.37 was your low on Monday. Couple other lows in that area. I guess the only problem is if you lose that, you're down 170, could be at 175 in a heartbeat. So haven't got 184 pre-market low, 183.37 low on Monday, must hold support, but something they're not liking in this report. That's for sure.
Yeah. Just so everyone knows in the chat, I am doing my absolute best to write down every ticker that I see, so we cover them during the show. So just so you know, drop them in there, and I am doing my best to write them down as we go here. Let's just bring Marc on here. Marc Chaikin is the founder of Chaikin Analytics, joins us every other Thursday. Give us his thoughts on markets, what sectors he likes, what sectors he doesn't, and the endless rotation between the two. Marc, good morning.
Good morning.
How has the week been treating you? How hard did you buy the dip on Monday is what I want to know.
I covered a few put spreads, but did not buy. However, on Tuesday, we triggered an up volume reversal signal. And believe it or not, that's been 100% reliable when it's come within 10% of the high. So this is research that a great sentiment service does. But basically, you went from 15% up volume on Monday to 85% up volume on Tuesday. And that has been an incredible signal for roughly a 1 month time horizon. So average gain of about 3.3% over a month. So that sets you up for further gains here.
When you say up volume, is that just broad market volume increase or what?
It's volume in the up stocks.
Okay.
It's part of the the trading ratio that's been around for years. It's sort of what the Marty Zweig research showed over the years, but this is a very specific pattern, and you break it down. Does it come within 10% of the high or lower than 10% of the high? And it's reliable when it comes near the peak.
Okay, so you had a reliable indicator on Tuesday. What did you do about it?
As I said, covered some shorts on Monday. Didn't do much in here. I think we've got an up market, but if you're looking at stocks reporting earnings, it's definitely a sell the news earnings season. So it's tough to position yourself in stocks that are due to report. You saw a lot of examples of that this morning, including Texas Instruments, DR Horton. Regarding LVS, by the way, Power Gauge has been bearish for 3 months, starting at 57. You're catching a knife in that one. I don't think I'd short it here because the news is out. People sort of know what the picture looks like. The reopening's a bit of an uncertainty here. But I will say this about the reopening: it's if we go into some sort of mini lockdown, mini mask, mini shutdown mode, it'll be the most advertised shutdown ever. I mean, that's all people are talking about on the major media. So although it's an uncertainty for the market and the Delta variant certainly looks like a problem, I think the momentum is going to continue here.
Oh boy, I don't know if I want to get that whole can of worms. But the only thing I'll say is that no matter how things go with this, if people are reluctant to get vaccinations, what do you think the chances of people willing to go into a lockdown are? I mean, I think that the line in the sand has been drawn. People have their opinions, and if you're not getting your vaccine and they're going into lockdown, I don't think that you're staying in. But
well, I don't think you're going into a lockdown. That's my
either
point.
do I.
It would be the most well advertised, adverse event, and they just don't happen that way typically.
So
Exactly.
I think we all agree on the lockdown front, but let's just say hypothetically, let's just say like we did go into a lockdown. Don't you think from the stock market standpoint, everyone remembers what happened last year, and the market? I think the markets would even go higher on that because everyone would want to front run the dip that they think would come. Right?
They might, but in that vein, what you saw on Monday, Tuesday was a resurgence in the lockdown stocks, and I think that's a red herring. History doesn't repeat that easily. The Pelotons of the world. That was a real bogus move, in my opinion. And I think you've got to look elsewhere. I think energy is a place to go. I think shipping is a place to be invested. So if you're looking for specific ideas, Genco, GNK,
you mentioned
Danios, look at exports from places like Japan, South Korea, and Taiwan. Exports are just booming. And they're going to China, the US, and the Eurozone. So there's big demand on the import side from the developed economies, and there's big export activity, and that speaks well for shipping. So those two names still have bullish power gauge ratings. I like them. Big pullbacks in both of them, DAC and GNK.
Mark, where are you at on this overheating inflationary environment versus a slowdown in growth?
Well, just look at the bond market. The 10-year is really driving everything, which actually, since the 10 years 10 basis points off the low as of this morning, you might be skeptical of the growth trade here, but I'm not smart enough to know what inflation is.
Yeah, I mean, I'm not asking for like it. I'm just talking about that disparity here. I mean, like crying for lower interest or for to fight inflation, and then you got Pump and Powell on saying no, this is transitory, and then you got the bond market. I'm looking at the TLT here. I mean, it had a huge decline, right, from that March craziness from 180 down to 135. So. I mean, people are getting all up at this move here, but man, nothing goes straight down or straight up. It could just be a counter trend move. I think the economy is doing okay. I think between the debate of inflation versus slowing down, I just think we're going to muddle along.
I do too. And under the theory that you want to fade the headlines, what have the major headlines been? Inflation, big problem. Economy is peaking. All around the globe. So if you fade the headlines, you basically muddle along and continue higher. But the big thing here is that the momentum that the market has built up trumps any sentiment, negativity.
Yeah, true.
And interest rates have told you what you need to know. Even if inflation does become a problem, the bond market doesn't believe it right now, which is bullish for stocks.
You said GNK, and then what was the other one that you had?
Danios, DAC.
DAC, Detroit Athletic Club.
Well,
Okay.
Mark, would you ever play like the BDRY, the dry bulk shipping ETF?
Yeah, that's not a bad way to get exposure across the board. I was going with the ones that had a bullish power gauge rating. But yeah, I mean, if you want to get broad exposure, absolutely.
Okay. Mitch pointing out that Christine Lagarde just said the word transitory, so everyone take a drink. No, Mark, I'm curious. We never quite finished the thoughts about the reopening trade. So where do you stand on that, broadly speaking?
I think if you can find stocks in retail, I think retail, specialty retail is interesting. And that's where I'm looking in terms of the reopening trades. So
What are you talking? Nike?
well,
or...
Hibbets, HIBB has pulled back a little bit from a new all-time high. The market, a lot of these reopening trades are small caps, and the small caps have been negatively impacted by falling interest rates. If you overlay the 10-year on the IWM, you see almost a perfect correlation over the last 20 years. So there's a muddled playing field here, or a muddied playing field, because a lot of the reopening trades are small cap stocks. And so they've been negatively impacted here.
That's an interesting point you bring up, because small caps have, of course, been the weakest area of the market recently, although not this week, actually. Not the last 2 days.
Everybody, myself included, has zeroed in on the fact that you had a 30-year extreme in small caps versus large caps, or small caps versus tech. And typically you've bounced very nicely off that kind of an extreme. Okay,
so for like 6 months there, it was actually, I was gonna make a point about growth and value, but never.
Well, yeah, it's same thing. It's okay. Growth and value. Small caps have become a proxy for value.
Okay, fine. So for 6 months there, everyone was, value is outperforming. We got you now, growth stocks. Look at us now. And now it's gone back to the way things were, more or less.
That goes back to the 10-year.
Okay.
In my view, the 10-year peaked at 175 in April, and it dropped to 119. I guess on Monday. That's part of what triggered Monday's decline, if you believe in those correlations. So that, remember, this market is driven by computers. And when the computers see rates dropping, what do? They get out of value and into tech and growth. And the sort of age of the active money manager is behind us, at least for now. So when you look at what computers do, lower interest rates, buy Microsoft, buy Apple, buy Adobe. Higher interest rates, buy small caps. Get out of growth into value. And the computers are much more a factor here than they ever have been, and the passive funds.
So looking forward to next week, we've got earnings. We got Apple on Tuesday. Wednesday, we got Facebook. We got PayPal. Amazon is somewhere in there as well. Looking ahead to next week with regards to tech, with regards to earnings, are you doing anything into it, or are you waiting for the prints? What's going to happen?
Putting on some options trades in tech stocks that have been strong, power gauge bullish, getting out of them ahead of earnings reports. It's that sort of standard Chicago floor traders trade. You buy the sort of slightly out of the money option on tech stocks in anticipation of a run up and an increase in implied volatility ahead of that. And but because it's a sell the news earnings season, it's really tough to hold stocks into the print.
Where you stand on the financials, Mark, if we're talking about interest rates and what what's the main driver for some of these banks? JP Morgan, nice pullback off the high. I mean, people don't put in perspective. I mean, what JP Morgan, I mean, this is an unprecedented move for this thing. And yeah, it moved up off the low, but look what it's done this year. Do you look at this as just like a healthy pullback after just, I mean, where did it end? It ended 20 at 127. We hit 167.44 last month. I mean, banks don't move like that. Now you got to pull back. Is this the pullback to buy, or do you think it's turned?
These are the machines making equity decisions based on interest rates.
When you say machines, Mark, are you talking? I mean, a machine for a day trade? Are you talking about a machine for a scalp? Are you talking more sophisticated machines that are trading things 2, 3, 5, 7 days? What's your definition? Because I mean, I know what my definition is in high frequency trading and whatnot, but you seem to have a little bit more of an expanded definition.
I think it goes from the most narrow time horizon, which is the HFT traders, but then it feeds into asset allocators who are, positioning for slightly longer trades of 3, 5, 7 days. And the key here is that money moves very quickly now, as we know, and one time horizon can affect the next time horizon. So in terms of the financials, if you have a long-term view of the economy as strong, you got to buy the dips here. But technically, they obviously have done much more on the downside than one would have hoped.
You want to hear an interesting stat? This is from Bloomberg. So historically, going back at least the last 30 years, typically the tech and financial sectors will trade in opposite directions about anywhere from like 25 to 30% of the time. So the majority of the time, they're trading in the same direction, or on any given day. This year, tech and financials have moved in the same direction half the time. So I mean, the other half, they moved in opposite directions, and that's the highest it's been going back the last 30 years. So the correlation is not really there this year. I thought that was interesting.
I think it's the rate of change of interest rates. Interest rates were stable in the 10-year in the 150, 160 area for quite a while. And you had tech and financials trading together. It's when the rate of change of the 10-year gets extreme, then they go in opposite directions. Because if it's going down, then tech is in favor and the banks are not. And if it's sharply higher, but when interest rates are in a trading range, then they will trade together. And that's what you're seeing. I don't know that this helps anybody. That's why I look at the technicals.
I don't know either.
I look at the technicals, and the technicals tell me what I need to know.
That's it.
Now, we found support in the energy stocks, for instance, and then we broke support on Friday, Monday, but they're rebounding a bit. I think energy, shipping are where I want to look for opportunities here.
All right.
And I want to be selling tech into earnings.
We will follow up with that call in a couple of weeks. Marc Chaikin is the founder of Chaikin Analytics.
Thanks, Mark.
His name is on the screen.
Pleasure.
Somebody was asking about his the rating he was citing. That's the Power Gauge rating right there. It's on his website, ChaikinAnalytics.com.
Are you out in Connecticut? You're out in Connecticut now, right? You're not in Philly?
Happily so.
Okay.
Bummer.
I was going to be in Philly next week, but
Oh my gosh. Well,
checking out the Liberty Bell.
that's fun. Good restaurants in Philly.
All right. Thanks a lot, Mark. Catch
Be
you.
well.
All right.
Thanks.
Let's go back. Oh wait, it is 8:30. And it's
Yeah. Do we have any numbers here? We did dip when we were talking, and I did mention that the close was really important, and we still haven't seen that closing price of 50.50. So at this point, I mean, the bulls are in full control of this market again today. That break that we just had didn't even get into the 51 handle, 51.75. We missed that low by a couple ticks, getting a 52 and a quarter, but kind of coming down here a little bit. But let's you want to get back to that earnings calendar?
I do. Initial jobless claims more than expected. 419,000 jobless claims filed last week versus a 350,000 estimate. It was also above last week's number as well. So a little bit of a hot jobless claims figure for last week. That was our 8 to 30 number. Let's go to Whirlpool here. WHR. Someone in chat noted, I think we talked about this the other day, and someone in chat this morning mentioned as well. Once companies raise prices, then they tend not to lower it, right? So Whirlpool blew away the EPS, blew away the sales, raised their EPS guidance for the year by several dollars, raised their sales growth guidance for the year from 13% to 16%. It's just a blowout quarter. Everyone's buying new appliances, and Whirlpool is raising their prices.
Yeah, and it's because the inputs, right? What they need to make it is going up.
Of course,
I mean, I think this is
passing it down to us. Of course, what else?
yeah, of course.
what
I
else we
think
can
that
do?
this is where I think this is a really good lesson here to look at the two charts on the right here.
Okay.
You look at this chart on the top right, and you're like, holy mackerel, this thing is getting smoked. Look at this, 257, 210, 220. Man, this thing is just in the gutter, right? But then you go to your monthlies here and you're like, man, this is nothing. This is nothing of a pullback here. I mean, I don't know. I still see that March low. I can't wait till it's going to be a long time before the March low is out of my monthlies here at $64. But you've tried to pull back. You've had a pullback. You've tried to rally a couple times. Once again, I'm just going to revert to Monday's low, and we're not even anywhere near it yet. Monday's low. We're not even at the low from let's see here. Oh, wait. This made a lower low yesterday. That's interesting on Tuesday. Huh. That is so Monday at 1063. Maybe some people nervous ahead of the report. You haven't even taken out the low from yesterday yet. Where you're trading now. You did in the pre-market. Someone stepped up here at 213. You got a nice bounce off that. Let's see what happens at yesterday's low at 1484. And then, of course, on a day like this, after you have a spike up to 223 and you have a drop, the importance of that closing price, 217 and a quarter. Does it take 217 and a quarter? Go strong, go bid. We'll see. Major resistance in here. Look at that. Before, if you were looking at this before the report, 223, 224, but that's kind of in the rear view mirror.
All right, let's move on from this. Biggest gainer this morning that isn't just completely ridiculous and is actually based on fundamental news or isn't a biotech is Crocs, CROX. They had earnings. They're up 10% this morning. Kind of the same story, right? Blew the numbers away. They gave Q3 sales growth guidance in the range of 60 to 70%. For the quarter and for the year, actually. I guess that's not a surprise because year over year, that's what
you only Crocs. I know Dennis. No,
I've had the same. I've had the same pair of Croc slippers probably for 15 years.
Jeez, they must be smelly, huh?
I don't really wear them that often.
Okay,
I only really wear them in the winter, and
I know Dennis wears. He wears the Walmart knockoffs or the gas station knockoffs of Crocs. Yeah. I mean, after you see a move like CMG yesterday and you see something breaking out to new all-time highs, I mean, how can you? And now you're just hovering up here. So I just keep an eye right here. We peaked at 131.70. We're only a buck away from that. I mean, you looked at that CMG chart for yesterday, and you took out the pre-market high right here, boom, and it was just off for the races. So one of those situations where, you go with that high, it takes it out, rallies, and if the fact it comes back down through there, then there's a potential shorting opportunity. But people are just they make more than just the plastic ones with holes in them, right? They make some fancy ones, but never had a pair, probably never will. And I wear sandals all the time to the pool and everything. Just never went the Crocs way. But impressive move, man. This thing has not, had a down month forever. So hard to fight the trend in Crocs.
Let's look at the airlines here. We had who do we have? We had American, we had Southwest, and we had Alaska, all reporting earnings this morning. I think they all should be out by now. We'll do them all in one shot. So we had the United report from 2 days ago, and it popped on that, and it's held those gains.
Too low, unchanged. Still continuing to leak here. We are now hit that closing price. We are now red by half. Sorry about that, Spencer. Go ahead.
No, it's okay. So the UAL it more or less has held the gains of its report from a couple of days ago. We had American this morning. I mean, the numbers are what they are, right? They're all losing money. They're all saying demand is going to be back anywhere from like 60 to or 50 to like 80% of pre-COVID levels. The numbers are sort of irrelevant here, but for fun, let's look at what Southwest said. Southwest said they expect their load factor, which is a measurement of the capacity to be at 85% in July, and they expect operating revenue in July to be down 10 to 15% compared to 2 years ago. Still losing money. Not a surprise.
Yeah. Oh man. I get these things in my head, and I get these rants, and I go on, and everyone gets sick and tired of hearing about them. But the airline industry, to me,
it's tough.
It's changed. Yeah. I mean, it's, and I don't think it's I don't think it's going to be those. I mean, that's why I could never buy Boeing. I mean, I don't think these big planes are it. I mean, I think people like Dennis. What's Dennis doing on his vacation? Well, I know Dennis is really cheap, but what's he doing? What's he doing? Well, he can't. Can you leave Canada?
Yeah, they can leave.
Yeah, they can leave. Okay, but he's going camping.
Right.
I mean, that's why I just think it's just hard to invest in these airlines. I mean, they lost so much money. I hope American just stays in business, like I said, to next Sunday when I get back from Philly. If you want to try and buy the dip on this one, well, first of all, you got a great reference point on the upside. We had the rally off Monday's low, 21.55. 4 a.m. If you got up at 4 a.m., you had to look at that because it hit 21.60. So there's a good number. Pre-market low was 20.80. I just taken out yesterday's low at 20.75. I mean, I just can't see any great support in there. S&Ps continuing to work their way under unchanged now. We are now in the red by 75 cents. So, or 3 ticks. So a little bit of selling here going on in the pre-market.
And let's just wrap up the earnings, and then we'll move on to some other stuff here. But we had Domino's Pizza this morning. Again, no real surprise. The numbers blew it away. They also announced a $1 billion buyback. And yeah, EPS crushed it. Sales crushed it.
Did you see the commercials that they've been running recently?
No.
That if you pick up something or whatever, and it's not out within a certain amount of time, your meal is free. Did you see that?
No.
Yeah. I hope I'm just not imagining this, because that reminds me, and I've told this story before, people get mad, but when we were in college, they had things where if they didn't deliver it within 30 minutes, then you got it free. And we lived on a one-way street. So we used to park our cars in the middle of the street, so the guy couldn't get down the street, and he would have to get out. So, and then I was just thinking of ways. Is it 2 minutes or something like that? But boy, I don't know. Once again, after that move in CMG yesterday, you got to be a little bit, tempered here on the short side. We're at 485. We're trading at the highs of the pre-market session. The only difference is this hasn't broken out to a new all-time high. CMG was breaking out to a new all-time high. You had sellers ahead of the report, right? 1, 2, 3, 4, 5, 6, 7 days ahead of the report. So what I'd keep an eye on this 485 area. Your 3-day high is 84.69. And then I'd see if we could get up to 89, 489. That spot's 3 highs ahead of the all-time high. So you had sellers before the report, and now you're getting to sell at a premium to that. So I think it's important just to keep going. Like this would be one where if it didn't show like some early strength and take out those numbers that I talked about, I think this one has more of a chance than like your CMG rolling over.
All right. Lagarde's still speaking here, continuing to parrot the point that inflation is going to increase in the immediate future, in the near term, and then seeming to agree with the Fed that inflation should decrease next year. If they are wrong, wow, is there going to be a lot of pissed off people. I guess I just wish we could fast forward to like February or March so we can get a feel for like how things really are next year. But that's what she's saying. That's why the TLT is rising. That's why the market is falling. It's just, yes, inflation is still here and it will be here for now. At least they all have their stories straight. Give them credit for that. They all got their stories straight. We'll see if they're right.
Yep. So the some dovish comments. TLT is rallying, but which is overall is good. It's good for the market here if rates aren't going up. But I don't know. I'm just like I think Mark made a good point, and I said to him, are we inflating? Are we stalling? And he was like, I don't know.
Yeah.
Just try and look at and that's sometimes where the technicals can lead you. Quit trying to figure out all the BS in the markets, and if a stock's taking out a monthly low, then it's going to its next monthly low. Stock breaks out of a monthly high or a trading range, then trade it. But we're leaking. We got down to 47.50. Little thin in here now on the downside, just because of the whoosh up that we had yesterday. So little bit more, leaning a little bit more bearish here now that we took out that close. I see 38.50 is 10 points down from here. I think you might attract some buying interest.
All right, let's go to the chat. There's a few tickers. That's pretty.
We do all of the earnings.
I mean, no, we didn't do all of them.
What about did it?
We didn't do like AT&T. You want to look at AT&T?
Since I own that pig.
We can do Biogen. We can do like there's
AT&T. Let's go AT&T.
I did not look at the AT&T numbers yet. Let's take a look. EPS 89 cents versus 79 cents. Sales 44 billion versus 42.6 billion. So they beat on the top and the bottom line in the second quarter. They seek sales growth for the year in the 2 to 3% range. EPS to grow in the mid single digit range on a percentage basis. They expect, here's interesting. They expect 70 to 73 million global HBO Max subscribers by the end of the year. That probably puts them in terms of growth, puts them in the middle of the pack, right? They're not on the Disney Plus level of growth, but they're not on like the Peacock level of growth either. They're somewhere in the middle.
They're doing I don't know. I'm glad I didn't take too big of a stake in this one. Okay, here you go. You got the setup. You got the dip. I don't know why anyone whacked it on that report to 27.72. What's the low of the move? Low of the move on Monday, 27.50, 27. So your highs have been moving up. I think you got to look at this as it's still obviously in a downtrend here since that big announcement. You got up to just over 28.50. Then you have all these highs here at 28.50 to 28.63. So I could get excited here if it gets above there, but I think right now you just have to respect that resistance and consider it being in a downtrend. If we could show some strength over 28.50, then you'll fill this little gap up here. I don't know why you gapped down again, but wow, you got a sizable gap here between 28.37 and 28.86. What happened on that day, Spencer? The 8th, July 8th. Do you have your pro open there for AT&T? That wasn't a dividend, was it? No. Was that a dividend? No, it wasn't a dividend day.
No.
That was a bad day. Downgrade? No. Yeah. Okay. Keep an eye on that 28.60. If you want to buy this on strength, if you're trying If you're trying to buy it on the cheap here, 3 low, 27.50 Monday's low, 27.65, then 85. So buyers kind of stepped up a little bit.
All right. The number one stock on my up filter this morning is this ridiculous one that I forgot all about until Mitch mentioned it this morning. India Globalization.
Boy, the toughest stocks.
IGC. I don't even remember. I didn't even realize that this was I guess it was a cannabis company, right? I'm pretty sure it's a cannabis company. And this morning they announced they received a patent from the U.S. Patent Office for the treatment of Alzheimer's using THC.
That's the key here.
So the stock is up 143% on that headline. I have not even looked at this in probably a year, maybe over a year. I forgot the stock existed, frankly. And I'll tell you actually because we used to talk about this stock a couple of years ago when this thing went to almost $15 in 2018. And that's when we talked about it, but we haven't talked about it probably since. So okay, still doing cannabis. Probably a lot of overhead supply. Actually, no, I don't know where it's at this morning. Where is it at? So it's at 3.5 now. So if you bought this thing in September or October 2018, congratulations. You held all this time. Congratulations. You might get your money back today. So that's what I have to say about it.
These are tough charts. I'll let you tackle this one first if you want.
Calling this chart is, if you can call this chart, you got to let me know. You got to call me so I can figure that out. But what I was interested in was that this is the first kind of major news that I see attached to THC versus CBD. Right. And so I think this is something that's going to be interesting and probably going to be viewed on both sides. Some people are going to say, well, that's a psychoactive drug you're talking about here. Do we really want to be giving, older people that? And then another thing will be is it more like, how did this study be done? Because I want to see this study myself. Because, usually you've been seeing a lot of good news come out from CBD. This is the first time I've ever heard a really good beneficial factor from THC. So,
all right, look, it's a good point. It's certainly an encouraging headline. We've seen other companies pop on Alzheimer's related news and not hold those gains. So that's
we've seen some go the other way.
That's
so. This is a Amex company traded on the Amex, and it's called India Globalization Cap Inc., and it's a marijuana stock.
Yeah, I think it used to trade on the New York Stock Exchange, if I'm not to be incorrect. I think when it went through that hype period that Spencer talked about in the past, I day traded that before, I remember, and then it just went to I think it had a T2 halt, and then had a news halt, and then eventually was delisted. But just be careful with a company like this because it's had a bad prior history. I'm going to focus on it today because it could make a run, but definitely you always got to know the histories of these stocks and their past.
And a good point from David Griffith here. This stock has a float of 47 million shares, and the pre-market volume is
already past it.
Already past it, or it's about to be past it. Basically,
you gotta be careful with names like that.
You gotta watch it. So anyway,
Psychotropic Thunder says they're based in Maryland. Is that true? Or is he making that up?
Maybe their corporate office.
Oh, Lord. I'll take a stab at this. Just because the market it's giving me a reference point.
Okay.
And that reference point is 372, and that was your February high. You got through that. You got to 389. So I guess if you've been holding this thing for the last 1, 2, 3, 4, 5, 6 months, and you had a target between 380 and 4, then I don't know. I'd be tempted to take it. The longer it takes to take out that high, and as you can see, we're starting to peel back, then I would look for a little bit more of a fade. But it'd be one of those things. I wouldn't short it at that $384 area just because I wouldn't short a thin stock like this because it could just blow your brains out. But, it goes for bid for size, and, then throw some out at 4.5 and see if you get taken. Throw some out at 5. And then the other monthly high, and the reason I said 380 to 450 was your August 220 high. So where you buy this thing on a pullback?
I don't know.
Yesterday.
Okay. Yeah, that's good. Okay, there's a few takers in chat I want to get to, but actually, before we get to that, Mitch asked a really great question yesterday, and I want to pose it to you, and I want to pose it to the chat. Is there one stock? How do I phrase this? Is there one old stock price that you can't get out of your head that you always like go back to and think, oh, if only I had bought this stock at that price then.
We all have those.
For me, it's like Roku it's every print from last March, but specifically it's Roku at 100 from like 3 years ago. I remember looking at Roku at 100 and being like, nah, too expensive. I'm curious if anyone in chat has that as well. Joey D says Sirius at 13 cents. Okay.
Okay.
Yeah, it was even
Apple
lower
at
than
20.
that.
Oof.
Apple at 20. That's bad.
What
Yeah.
about you, Joel? Do you got one like that you missed out on?
I mean, if you go, I had this one buddy. What's a Sirius satellite? I guess I could go that. I mean, I had a buddy that bought it. That thing traded at a penny forever, right? What's it? SIRI?
Yeah.
Oh, I wonder if Apple's happy about
Tesla at 148. I'm seeing.
Oh, I know what it is.
Yeah,
I know what it is.
What do you got?
Tesla at 40.
Ooh.
Yeah. Oh, yeah. I looked at this one and man, let's see.
Oh, that's a Jar Jar put a good one. AMD at 12.
I saw someone put AMD.
I don't even want to talk. I had hundreds of 2 calls in AMD that expired worthless. I mean, I don't even want to talk about it. I might even had thousands of them, and like, oh no, this thing's not going. Then I gave up shorting it. But there was Tesla. Does it go back? That's Sirius satellite, but. Let's see if we can find this. You probably can't. It's not even at 40 anymore because of the split. But it IPO'd. It kept on going up over 40. Kept on hitting 40. Kept on hitting 40. Kept on hitting 40. And I'm like, when that thing goes through 40, I'm all in. And it did it. And now, wow, whatever. New low in the spoos here. Continuing to leak. Now we're down by 3. Oop, that chart's way too big. By 3.5 handles. So
Okay. All right. So sorry. I thought it was a fun question. Let's move on though. Somebody asked about KB Homes, and this is interesting. The home builders are actually having a pretty good week. We did have DR Horton, which is DHI, report earnings. That was this morning, wasn't it? Yes, it was. And they beat and they gave some good guidance for sales guidance for the year. But if you look at the home builders overall, this week, it's been a pretty good, maybe not this morning, but I haven't looked at DHI yet, so it's down. But prior to this morning, it's been a good week for the sector. Lennar, KB Home, et cetera, et cetera.
Yeah, REITs overall have been doing pretty well recently. I mean, if you look at all of them, they've been really bouncing back strong.
I don't know if you have thoughts on KB Home.
Yeah, I'm looking. I'm looking at this one. I mean, after 3 up days like this, this is the way I'll give you a perspective on this one here real quickly. If you're still bullish this thing and it hit 85 on let's call it 85 and 92, that's 7.3.5, 88.5. You're getting a little bit, a little discount here. So if it could stabilize, hold 88.5 and turn around and go up. If not, if we can't get back and hold 88.5, I still think after this powerful move off 85, I don't think you're just going to whoosh down to 85. I think you're going to find bids ahead of it. On the bearish side of things, this is your 3rd lower monthly low in a row. How much better can the housing market get? Rising costs. There's a couple different things here, but 85 and 88.5 would be my levels for DHI today.
What about KB Home?
KB Homes down 32 cents. That's showing some relative strength here. I'd be looking, just the way it came off that low. I'd have to add some significance to. Hasn't even come close. Well, I don't want to say come close, but see what happens at yesterday's low, 40, 35.
Okay, and to follow up on my comments from yesterday's At the Close show, yes, I am certainly very interested in taking a stab in either Penn or DraftKings today.
Why?
Yes.
Why?
That's what I wanted to get into. Let's
Why?
do it.
Because they both had a couple of strong days.
Okay.
I'll throw out. I'll get in. I'll throw a stop out at like here. So let's look at DraftKings. Okay, so
Did I tell you people are running out of money? Did I tell you guys that? And you guys poo-pooed me on that when that stock was like, oh, people are going to have money. They're going to still keep gambling.
Yeah,
Huh?
I don't.
Not gambling
I
money,
still
though.
don't agree with you. I still don't agree with you. Nobody agrees with you. I think.
One thing you forget, Joel, is
market
they
agrees
give
with
you free money in gambling a lot of the times.
Oh my God, it's
Free money.
Yeah, but then you lose it, and then you have to put more money
Yeah,
in.
but how many people? They're not giving me free stocks that much, so I would take the
Benzinga's
free
giving
money
some free
in gambling.
Tesla for some free Dogecoin.
No, Joel. You're saying that once you lose, you're not going to put more in. Of course you will. That's how they get you. Anyway,
That's how they get you.
So DraftKings, up. If Dennis were here, he would say, "Well, the time to buy was 2 days ago." Well, it's up $8 in the last 2 days. You get in, you throw out a stop out at like 46 or 44, and you see what happens. And so that's probably what I'll do today.
I want to point this out for you on the DKNG chart. So
Yeah.
if you look back on the daily charts and you look back at last year when we were going from July into August, that's really when we got our run. So a little part of me is thinking that gambling stocks are going to fall into seasonality.
Okay.
And it's going to be a lot like Joel mentioned yesterday, the NFL season coming out. These are the kind of trends that I think can eventually push the gambling sector right back.
That argument I go for.
It's an interesting observation. This thing's only been public for a couple of years, so we don't have too large of a sample size on the seasonality front. But I like where your head's at, Mitch. I'm interested. I'm
thinking about it at least.
Yeah, I'm interested.
Stories, everything. We'll see.
That's true.
And you got a reference point. I mean, what's Penn doing today? Boom.
They're both doing nothing.
It's down. Let's see here. You moved up from 63 to, let's call it 73. So, yeah, I mean, I would, if I was taking a stab here, I'd, under 68. That's about halfway back. What was yesterday's low? 69.85. You're giving yourself some room, but that's the best three. I will say this is the best 3 days Penn has had. And man, how long here? This was a pretty good 3-day period, but it was on the way up. So I'll give that for you. Penn moving up. Boy, I can't put 2-for-1 stock split, huh? 140 and then down to 63.15. So you're going to be fighting the overhead supply thing too. The people that waited, you got people that are long, like Dennis. Like if this thing gets back to 75 or 80, I'm out. So could be a little bit different run. And maybe if you want to be more patient, Spencer, let's go to the monthly.
Why would I want to do that?
What was last month's close in this one? 76.49. I'd say you end up getting a green month here out of this one. Rally another $3, and I could really be hopping on the bull train. In Penn.
I just saw a comment from the Biogen CEO who said the overall launch of their Alzheimer's drug is slower than previously assumed. This thing has been doomed. It almost feels like it's been doomed from day one. And obviously, I hope that's not the case. Right?
The drug or the rollout or the company?
All of it. We're all rooting for this thing, right? I think that goes without saying. But anyway.
What's going on? I'll do this. What's going on with this Neuro stock? Everyone, is it a penny stock?
All right. Here's what's going on with the Neuro, and we'll get Peter Tuckman on in a second here. So this was a high flyer from a couple of days ago. They had earnings this morning. The company is so small that their Q2 sales was $2 million. Right, that was their revenue. Their revenue, $2.2 million last quarter. Okay, so this is the high flyer from a couple from last week, or no, it was this week. It was a couple days ago, and they had the FDA breakthrough designation for their treatment of fibromyalgia. That was on Tuesday, and it really hasn't stopped. Oh, that's not true. It has. It's not at its high right now. It did go down a little bit. It's at 38 yesterday, so it's at 31 now. But you basically had 2 straight days of like news plus it's kind of a viral stock and it's a low float. I want to say what's the float on this one? It's 4.
I'll let you. Hey, listen, I'm gonna cover these crazy ASS stocks on PreMarket Prep Plus. Because they could move another $10 by the time I sign in the other thing. So join me on PreMarketPrep.com for PreMarket Prep Plus. I'll try and cover these crazy stocks. Spencer, I'll see you at 3:30. Right, so take it away, guys. Go get Peter. See you later, Mitch. Thanks for the help today.
No options available. That's certainly part of it. All right, let's bring on Peter Tuckman here. The Einstein of Wall Street. See him. It's the Einstein of Wall Street, Wall Street Global Trading Academy. Joins us every Thursday from the floor of the New York Stock Exchange. Peter, oh no, we lost him. We had Peter, and now we lost him. He's frozen on my screen.
I wish he would have actually came up with the screen picture. It would have been perfect because it looks like he's just peeking over the screen. But he'll be back.
Yeah, you guys can't see what we see. It's frozen now. Anyway, okay. Peter will join us in a second. I
got a sector here if you want.
You got a sector?
Just an industry. Solar. We wanted to point out a little bit. There's Peter. I think he's coming in right now. Boom. Goodbye, guys.
Peter, we got you.
You got me. You know what? Sorry about that, Spencer. I'm not sure there's sort of an unstable connection. I'm not particularly unstable, though. I have been.
You sure? Oh no! It happened again. It's the 3rd time.
You had to ask the question, right, Spencer?
That's the 3rd time this morning that's happened. I keep seeing Peter. All right, so
it's that kind of day, man.
I almost want to keep it up because
smash the like
because it's funny
for Peter.
This guy makes the best facial expressions. Oh no! Wait, let's see if he's back. Let's see if we got Peter back here. I don't know. Anyway, as I was about to say, I know there's a few things we didn't get to, right? We didn't cover Sava. I wrote that down. We didn't cover Tesla. I wrote that down. I mean, we did a little bit. There was a bunch more in the chat. I'm sorry if we did not cover all your things. We didn't talk about Adobe. We didn't talk about Netflix. Someone mentioned that. I know. I apologize if we can't get to all the stocks in 1 hour. Joel's doing his thing now on PreMarketPrep.com, and he'll be back at 3:30 to do the At the Close show with me, so we can always ask your questions then and there. I did want to mention CCIV, which had a bit of a sell the news event. Okay, I'm getting the thumbs up now from Peter. Peter, good morning. Let's just make this quick because I don't know how stable your internet connection is. What is the sentiment? What is the tone down there on the floor this morning? Damn it. This is not going to work today. This is just, it's just not our day. It's just not our day, I think. The internet gods, they just don't, they don't want it. So, I would presume that the internet connection is very strong on the floor of the New York Stock Exchange, but for whatever reason, maybe it's Peter's iPad, maybe it's us. Who really knows at this point? But I don't know if this is going to work out today. But anyway, Peter does join us every Thursday at 9:00 normally to give us his thoughts on the market. So if you don't get him now, we'll get him back next week. Not to worry about it. So I mentioned CCIV. It was a bit of a sell the news event, right? I don't actually know the status of the vote. I think it's still open, right? Yeah, the poll. Okay, here I've actually got it in the pro right now. The polls are still open for CCIV. Let me zoom in. Okay, this is as of 8:15 this morning. CCIV polls remain open for business combination. This is a press release out at 8:15 this morning. So if you are a CCIV shareholder, vote one way or the other. But vote. Do your duty to your stock. So anyway, as far as the chart's concerned, very interesting, kind of a round tripper, right? The last couple of days, more or less. Interesting. Anyway, have this on my radar here. What else would I? Corey D, man, don't even joke about that stuff. We didn't talk AMC at all yet today. It's had a very nice bounce past couple of days. Well, not so much yesterday, but the 2 days before that. I don't really know. I mean, it's super encouraging, right? That green candle from a couple of days ago, super encouraging. The chart looks so it's almost giving us heat for poo-pooing AMC and saying I didn't listen to you guys and I would have lost all this money. Well, okay, great. But can you at least acknowledge though that the AMC chart looked disgusting from the end of June till 3 days ago, right? At least acknowledge that.
I want to go on a limb here.
Go on a limb.
GME moves first. Then AMC follows.
Wait. Hold that limb. I think we have Peter.
Oh, we might have that limb.
We lost him. Wait, no. Okay, back to the limb. We had Peter and then we lost him again.
Don't worry. If anything, you just throw me off the tree.
Okay. So GME moves where? Does what first?
200 first.
GameStop to 200?
GameStop 200. I'm feeling it.
That's not that hot.
It's not a crazy move, but one of the things that I think could happen is, remember, we had like kind of GME explosion, then we had AMC explosion, then we had another run in GME, then we had another explosion in AMC. So what I'm thinking is maybe GME blows up first, then we get that next run in AMC.
Okay, to the point about the short interest on AMC, though, it hasn't been going up. It hasn't been going up. It's easy to borrow. Wait a minute. Now we got Peter. Hold on. AMC is easy to borrow. It's not hard to borrow. I don't know if there's really still a squeeze here. I understand if there are still some shorts out there. There are always shorts out there in everything, right? Always, all the time. Just because shorts haven't covered doesn't mean there has to be any forced buying. I don't know.
See what happens. Let's see if we got Peter. If anything, let's maybe try to turn the camera off. Maybe just get him audio only, but.
Yeah, let's see. Peter Tuckman from Wall Street Global Trading Academy. I'm going to turn his camera off for him. And Peter, do we have you? I hear something.
You got me.
Yeah.
There you go.
Yes,
we got him.
Yes, Peter. Good morning. What is the tone? What is the sentiment down there on the floor this morning?
Hi, good morning, guys. So look, there are a couple of things going on. There's we are on fire as far as new IPOs coming to the market. We've got 3 of them today. And so when you see that kind of an appetite, we feel that the floor is really coming back. The road shows have been successful. The stocks have been opening. It's questionable how they're trading once they open because there's this over enthusiasm about the opening. And then sometimes we're seeing a little bit of a sell-off after that. But I was just sort of talking with a couple of guys from CNBC. And, it's been a hell of a week, right, guys? Let's be honest, what we've seen here. We saw this early week sell-off, and that was sort of the perfect storm. It was clearly some energy-related stuff with the Saudis and oil, and clearly the overriding factor was the variant and the pandemic and what's coming. It started in Tokyo with fears going on there. It came across the earth. Europe was down 2% that day, and it's sort of funny. People sort of don't really look at the fact that we've been up for a year and a half and we got a couple of down days. And I always say one day does not make a market, right? The market was down 700, granted, but in the big picture, that's really not that much. We rallied 250 points into the close, and we've had 2 really positive days since then. So I believe that the market tells us what it thinks about what's going on, right? Net, the fact that we are where we are relative to where the world's been for the last year and a half is extraordinary, right? It shows the enthusiasm in the investment community. It shows that there are all these new retail traders that are into the market, and we're seeing the volatility that we love. And these are opportunities for, you and I, we speak about it. You talk about it with David all the time. I had so many people on the call on the night that the market was down 500, 600, 700 that day, talking about the, doomsday. And I find that baffling to me how suddenly it becomes doomsday when 24 hours earlier we were at record highs and the world was all wonderful and full of glee. So I beg people to really look at these opportunities. Every sell-off that we've seen over the last 6 months, and we had a few, they've not been long, they've been very short-lived. One was, one was that inflation fear. One was the death cross in the yield curve. And then one was the recurrence of the pandemic. And each one of them has been no longer than a 3-day sell-off, maybe a week at the most, that we've seen over the last year. So the market tells us that these are buying opportunities, not times to sell. And if you did sell into any of these sort of panic days, then you would really be disappointed. It brings me back to the whole thing about technical analysis. Once again, not to beat everybody over the head with it, that these, if you look for opportunities and use technical analysis, you will see, not from the long-term investor point of view, never look at your portfolio on those down days, because you will get emotional about money and you will sell when everybody else should be buying, in my opinion. Coming into this morning, though, Spencer, obviously the how much do we want to read into the employment numbers, right? The employment numbers did tick up. I mean, the jobless claims did tick up a little bit this month, more than expected. Is the market reacting to it in a big way? Not really that much. We're down, 3 handles or whatnot. But it is, it does make us sort of look at what's really going on here. I think we are going to have some problems with the variant. I think we've got states that are ticking up in a big way. I hope, that people realize that, and that it can affect the economy. It can affect the reopening story. But the market does not seem to be reacting to it today.
Based on conversations you have with your clients, I mean, the Delta variant's one thing, inflation is something else. How much are they concerned about inflation or not really?
So look, let's address it once again. We had the inflation story, sort of knocked the market off its wing there a couple of weeks ago. But once again, and the press and the media played that story over and over and over again. And what came out of it was that the inflationary story is a transient story. The Fed came on and talked about it also. There was no playbook for this reopening. We've never been where we just came from. And so we've never been here before either. So yes, markets have historically reacted to inflation. I don't know, this inflation story is a new one. It's got sort of different, it's got a different look to it, right? We don't know it. It's a function of the fact that the supply chain got shut down due to the pandemic, and it's sort of getting its gears back, right? We've got people who are wondering how they're going to get back to work. They're apprehensive about going back to work. They want to be paid more money to go back to work. And to get the supply chain going back on, it's going to be a little more costly. So I think the most important things to look at, I think it was an important statement by the Fed the other day, that they're going to give us a lot of leeway, a lot of heads up before they start tapering, right? So that's been another thing lingering in the story is, are we going to get hit by a storm one Wednesday when Mr. Powell comes on and he goes, you know what, we're shutting down, we're going to start tapering today, next week, a few weeks from now. And the market has been sort of skittish on those days when that was the fear. And so the statement by the Fed the other day that we are going to give you a big heads up before that happens, a couple of months, in fact, I think that puts a little bit of a support into the marketplace. The inflation story is transient. If the market was really worried about that, I think it would have sold off on that. And that sell-off was a short-lived one. It was a couple of days, right? I mean, it looked ugly for a moment, just as ugly as Monday did this week. It was a down 600, 700, 800 day when the inflation story ran for a couple of days. And I think the sell-off even lasted a couple of days. But once again, there is a bid in the market. We talk about that here on the floor a lot. There are gaps in the market on the way up, gaps on the way down. There are vacuums within the market. But where is the bid into the marketplace? And we've seen that whatever story it is, whether it's a trade fear with China, whether it's the pandemic, whether it's inflation, whether it's jobless claims or whatnot, whether it's the taper, within a day or two, we find a bid in the market, which means is that there are institutions, there are large funds that are sitting there with a shopping list. Kramer always talks about it. When the market sells off, get your shopping list ready, right? Get the stocks that have been a little bit long in the tooth that you've been dying to buy, right? Over the last year, some of them are up 10, 20, 100%, but that they have a great long-term forecast. Get your shopping list ready. When things go on sale because of one or two overall triggering entities, then start buying them. And we've seen that be the case, right? That there are stocks that have been, from a long-term investment point of view, have been way overvalued over the last year and a half. They've been just bought with that irrational enthusiasm that the market's had since the March 2020 lows. And so when we have these short-term sell-offs, there are people who are sitting there ready to hit that button when things go down 7, 10, 12%. They're just ready to load up on those, whether they're averaging into a bigger position or whether they've been dying to buy these stocks for 8 to 10 months and they're finally getting the opportunity. And that puts a little backwind into the marketplace. That puts a bid in the market. When the market feels that, right, you see the sell-off slow down, you see the reversal, and once again, if you're a trader, technical analysis gives you that opportunity. It gives you the sign where, whether it's relative strength index, whether it's the moving average, whether it's pivot points, it gives you that criteria to know that the market or an individual stock or a sector is going to stop going down and start reversing.
Peter Tuckman is the Einstein of Wall Street from Wall Street Global Trading Academy, summing this whole thing up in 2 sentences. It's one, technical analysis is tried and true, and it works for a reason. And 2, there is a bid in the market. Those are the 2 things that Peter just said here with us this morning. Peter, thanks so much. Appreciate you working through those connection problems.
No problem.
We'll do next week.
I look forward to it.
All right.
Be well, everybody. Happy trading.
All right. 9:17, everyone. All PSA, all of you Wish traders out there, if you trade Wish, put August 12th on or circle that date on your calendar. It's already on your calendar, right? Circle that date on your calendar. Put that date on your radar. August 12th, Wish will report earnings after the close on that day. So have that date circled if you are a Wish trader, investor, whatever. Okay, it is 9:17. We got a couple minutes before Robert Roy will start going live and walk through some option setups for the day and for the week. That'll be followed by SPAC's Tech at 11 o'clock, which will follow by the Power Hour at noon. No get technical today, but what we are doing, and I should pull up a chart of the stock, and I will, we are restreaming the EA Play event. This is EA's big event. Remember, they were not at E3 earlier this summer, EA. So today is the event where they're going to announce new titles, timelines for those new titles, and Call of Duty. There's a lot going on here, a lot of balls in the air for EA. It's called the EA Play event. We're going to it's at 1 o'clock Eastern time. We are going to restream it here on our channel. So that'll be that at 1 o'clock. We've got the crypto show at 2 o'clock today. That's followed by Stock Trivia, Zinger Stock Trivia, our most fun show, our most interactive show, at 3 o'clock today. Joel will be back for the At the Close show with me at 4. The Cannabis Hour is at 4. Joel will be back at 3:30. The Cannabis Hour is at 4. That'll be followed by After Hours with Ryan Rose Biani at 5 o'clock and Chance Trades at 6. All of this is on Benzinga's Twitter account for the full schedule of the day. Okay, let me see what I missed in the chat. I don't think I missed too much. No. Oh yeah, DD. Yeah, they're gonna. That's probably good news, right? They're gonna get this record fine, and like in the U.S. When a company gets fined, that's good news because it means that it's over with. It's done, right? Like J&J yesterday settled, right, with a couple of states for the opioid crisis. Settling is bullish, right? Paying a fine is bullish because it means the unknown is now known. It's over. So yeah, they're preparing a record fine for DD, reportedly. Shouldn't that be good news? Because it means there's one less unknown. Oh, delisting is part of the fine? Well, okay then. I didn't see the delisting part, Dennis Bender. So thanks for that. Are they actually going to delist it? That would be bad. Okay, that makes more sense. Why it's down 5%. That would not be good. What a rug pull. Seriously. What a rug. What was the IPO price on this thing? Was it like 15, 16? Let's look. Oh, wait. What was the IPO price on DD? Let's go back a few weeks. Opened at 1665, IPO price to 14. Jeez, what a rug pull, this stupid stock. Unbelievable. Unbelievable. Ridiculous. I did see Neuro. I have Neuro up on my screen here, so I did see it is at a high of the pre-market session. High of yesterday was 38.67, so we are knocking on the door of that right now. So, yeah, great morning for NU. Congratulations to everyone in this one. I wish it was me. It is not. How come I can never find like the 100, 200% gainers before they gain? That's easier said than done. I know why, because I would look at this chart on Tuesday, at $4 and $5 and say, oh, it's already run up 100%. That's why. Like Tuesday, I went from 3 to 11 on Tuesday. So I'm sure I saw that on Tuesday and was like, oh my God, it's already over. I can't chase this. That's why I will never get a 1,000% gainer like this. I have to believe in myself. Levi, you're right. Or Levy, sorry. Okay, that's going to be a wrap for me here. Everyone, please remember all the information from our show is meant to be used as informational purposes and not for investing or trading advice. That actually goes for all of our shows, not just this show. Always remember that. Thanks to both our guests today, Peter Tuckman and Marc Chaikin. Both of the links to their Twitters, to their sites, are in our description. Marc can be found on Twitter at Marc Chaikin. Peter can be found on Twitter at Einstein of Wall Street. And the link to Peter's website is there as well, where him and David Green offer a pretty good trading course. You should check that out if you haven't already. Okay. Money Mitch is back. Just in time.
Guys, check it out, guys. SPACs Attack. We got a great interview today, guys. DMYI, okay. IonQ. If you've ever wanted to learn a little bit more about quantum computing and how that's going to come into the next generation, I really call this more of a generational play. So check it out, guys. I mean, if we went from dial-up to quantum computing, just imagine where we can go to in the next 100 years.
Wait, I have one last thing I forgot to mention. WISA, Summit Wireless. We broke a headline this morning. We broke here. I'll bring it up on my screen so you can see. We broke. Where's my screen? There it is. We broke the news at 7:13 a.m. that Summit Wireless is launching an Amazon storefront. That was at 7:13. If you saw the headline, you had a chance to buy this thing before it. Actually, no. When was that candle? Yeah, that was that candle, 7:15 right there. So anyway, we're going to have the CEO of Summit Wireless on the Power Hour today at 12:30. So your big gainer, one of your big gainers in the morning, WISA headline there in Benzinga Pro, exclusive at 7:13 that they launched an Amazon storefront. Stock is up 23% in the pre-market session. All right, now I'm done. And everyone have a good start to your day. Good luck at the open. Hang out for Robert Roy walking through his option setups for the day and for the week. Right now on this stream, this video will redirect to that, so you don't have to click anything or do anything. It'll go right from here. And I will see you back on a little bit later. And you'll see Mitch at 11 for SPACs Attack. So good luck. Make some money. Make that money. And smash the like. Thank you very much.